Futurespeak, August 12th, 2015. All right, well, the story this week has been China. We've seen some awful big moves, and a lot of things that we talked about in the last week really have come into play. Stock market, of course, getting weak as we've expected. We had the oil market, well, that turned weak. That wasn't quite as expected as we're looking for a bottom to form in there. Gold had a modest bounce, as we did expect, and the dollar got absolutely hammered, and that was very much in line as that helped the euro get a bounce. Also, China, essentially 2 days of devaluing the yuan, and what that does is hopefully stimulate their exports. What it really does is export their deflation to the rest of the world. And that's why we've seen this weakness generally across the board in commodity prices. What that has done is really helped the bond market, and that has changed the scenario a bit in bonds for the short term. Longer term, intermediate to longer term, not really changed at all. And we're going to look at those in just a couple of minutes. Of course, we start in the energy sector where we always do, and we're going to look at light crude and heating oil, gasoline, heating oil, and then natural gas in the energy sector. So get all set up here, get ready to bring you this good look at these charts. We had, of course, a bottoming that we expected now in the oil pretty soon, and this action of exporting the deflation to the rest of the world from China, #2 economy, has really been leaning on it. Now the products are better. There are some signs in there that we're getting bottoming in gasoline and heating oil. That's a good sign for oil, and oil is very, very overdone on the downside, very, very extended as far as the cyclical pattern does go, and even the shorter term pattern now is getting down to the bottom area where we expected it to turn up. So we're going to be looking for upturns here in the oil market, the energy markets here pretty soon. And well, we've been looking for it pretty soon, but no, I think that if we can get some stabilizing in China and this information, we're going to get a bounce in the oil market, and it may be of some significance. So let's take a look here at this light crude chart, and we'll start on the weekly. This weekly bottom, there's a 20 down there, which is 20 weeks. And that is really where, we expect a bottom to come, right around that count on the weeks. Now, these cycles are a little bit off in here as far as where that low came. We've run past it, and that's as this 6-week period right in here kind of pushes these out. So we're not sure whether or not this 19 was the low or the 25 was the low. Anyway, we're 20 weeks off of this low, and that is really getting on the long side. And that's why we're drawn this way. That's the projection for the cycles, and we're really looking for a bottoming to come in here. Now, if we look at the daily chart, we will see that this is also running a little long on the downside. There's a 10 down there, which is the 10th day. We're getting some of those little bit of longer cycles here, which happens on the way down because, well, the buyers aren't showing up. You could see the feeble bounces in these cyclical areas right over here. I mean, almost nothing in here at all. And we're in this area right here where we should get a bounce. We're going to look for light crude to get a bounce and start this bottoming process. We'll look for 45.20. That's about $2 bounce sometime in the next, we'll call it, week and a half. And that's a pretty bold call based on the type of weakness that we're seeing in the market right now. We'll switch over to gasoline and heating oil, and you'll see that there is an attempted bottom going on in here. Got this set out to 10 years, so I have to bring these back in. Oh, I didn't want to do that. Let's go back out, and you can see. There we go. Okay, here is this cycle that we're in right now. Now notice the bullish piercing pattern right there. You don't see anything like that really in here. So that is a sign. Now it's about 2 weeks late from this expected bottom right there, but we have all this weakness in energy. So you're getting this kind of a week when you've got this stuff going on in China. That's a good sign for the energy market, for this whole complex. And I think that there is the first sign we've seen of bottoming in here. So we could be getting a bottoming here in energy and that bounce that I'm looking at. Now here is heating oil, and you could see our projection of this low 2 weeks ago also, and getting a little sign right here of a bounce. There's a little piercing pattern right there. It's not very much yet, but that might be setting up our rally in here, which you can see based on the amount of decline, we're only looking for a rally up into the resistance area of that declining 34-week moving average. So that's why it's drawn with such a shallow advance in heating oil. So that's a look at the three major energies. Heating oil here on the daily, not a whole lot showing us right there. In fact, a little bit of a flag, so might need a little bit more work there in heating oil. Now I'll take a look at natural gas /NG. This is some nice action in here actually in natural gas. Take a look here at the weekly. There's the big patterns as they shaped up in there. Let's just look at this last cycle right there, and you can see this green zone that we have been in. That's been a rising zone. Now there's two smaller patterns making up each of these bigger patterns. Let's take a look at those here, and you can see that we look like right now that we're in beginning this rise right over here. So this correction right in there was not a whole lot, and now we're in the secondary rise. That could get you above the $3 area and even up to that resistance right there, which is, we'll call it 324. So natural gas is taking on a better picture in here, even in spite of all of this China stuff and what's going on in the world. Let's take a look here, and you could see that this is getting up to that resistance area, the first one right there that we talked about, following the pattern that we expected. So if it keeps following this cyclical pattern, you could see right in here the rallies and sell-offs as they match these patterns in here. That brings us a sell-off in this next week. It probably resists this area, maybe comes down a little bit like this, and then gets into the next one and see if we can get through that area above the 293 and then even spike up to the 324 number. So this would be a surprise, wouldn't it, if that took on a little more bullish character in natural gas? But basically in the energies, we're seeing some continued good amount of weakness in there, with just a little sense of bottoming in these products in gasoline and heating oil. That could be the sign. Natural gas, the best of the four that we just looked at. Now we're going to jump over to the dollar. Now this is an interesting scenario, very interesting, because if you think about it, China has downgraded their currency 2 days in a row, about 4%. Now what they did is they came in late in the day before our markets opened here, and they tried to stabilize it. Some sign that, well, they don't really want to go any lower. That probably means that we don't get another surprise cut in the next day, and that probably means that, well, we get some stability just for the near term in here. Now we looked for a decline in the dollar. Now if they're cutting the value of the number 2 of the currency of the number 2 economy in the world, you would think that would be bullish for our currency, right? Well, not. Why isn't the dollar going up when the Chinese currency is going down? Well, if you just had on that particular pair, dollar versus the Chinese currency, well then, yeah, there's a 4% difference there. However, what we're getting is that there's likely to be a currency war. In other words, the U.S. in some way fighting back. And that would slow down the amount of or when the increase would come in interest rates, because, well, the Federal Reserve would try to fight back, and that would then cause our dollar to be less interesting to the world, and then the dollar's value would fall. So we're getting a weak dollar, in fact a very weak dollar, at exactly the time we expected. The European currencies not probably as affected. Their economies are actually probably better, more stable than the U.S. is here, and less susceptible to the effect of that export of deflation from China. Therefore, the European currency is stronger. I hope that was a clear explanation of how the markets are interpreting that. We're going to take a look here at the dollar index and bring this chart over right now. I'm still stuck in natural gas, aren't I? Thought I'd change that. /DX is where we're going. And we'll take a look here at the big red zone right there. You can see we were looking for a decline in here. As a matter of fact, based on these patterns, we're looking for a sharp decline to occur right in here over into mid-September or a little bit later. So the next 4 weeks basically have a lot of risk. See the 34-week moving average coming up. It's been a source of support. And I'm really thinking this 38.2% number at 92.50 is a target for the dollar in here. We can see in here on the shorter term pattern, this is some ugliness that's formed in here. This pattern in here, you can see underneath these lows is a breakdown right in here. So in other words, this pattern right in here is this right here. And then you get the rally, but then it breaks down already. And what that says is that this big pattern is likely to go down for all that period of time. That is really a very, very bad pattern. And this is the first thing that's happening that actually is giving us a sense that gold may be getting ready to make that bottom. And I'll show you that it's looking like a little bit of an early bottom in here in gold. We talked about gold bottoming in the next couple of weeks, but this is a big sign in here where you get this breakdown in the dollar. That says that it's likely that we're going to get some continued rally in the euro and a breakdown and a bottom forming in the precious metals. In fact, GDX is already forming a bottom in there and looking really good. Here's the euro weekly pattern. We were looking for the rally to come up. This is now a confirmed green zone, and that's the rally going on. That could go on for several more weeks as the dollar goes through this decline for several more weeks. Very, very nice pattern that we saw there following our scenario. Well, literally perfectly. Now, here is a little bit of an early short-term pattern. You see this bullish early bottom right there on this pattern. I didn't really expect that, but China helped it happen. And now you could see up to almost a perfect touch of that resistance number right there. Now kind of just sitting. So this rally right here, that has already begun. That's that one there. And we're going to look for higher numbers in here, getting through here. There's another resistance coming across right here about the 112 and 112.70 number that we could probably see this thing pop up to kind of quickly. So this is a nice pattern that we're seeing here. And let's move this down to 2 years so we don't see all of this long stuff and all of these things I'm going to show you now. So there's that euro pattern. Let's look at the British pound. And you could see British pound rising as you would expect it to be with this action in the dollar and the euro. But this one is really acting relatively weak compared to the euro currency. Now kind of stuck under this moving average there. And I would call this one underperforming based on what we would expect here. That is the British pound. Here is the Japanese yen, and that Japanese yen is getting saved by a little bit. It's now in this long yellow zone like it did over here. In this cycle, you would expect it to get into some choppy action. If it got under the 79.45 number, this turns red and it then becomes bearish. We'll see if it saves itself in here. You can see on this daily chart, which I will blow up, that there is an engulfing pattern right over here. I don't have daily cycles in on this one because they're not all that consistent. Well, I can see some right in here forming, so I didn't want to do that. Let's grab a cycle bracket, see if this is lining up okay in here. That's a little bit short. I don't really love it. Let's see. Like this. Well, it's all right actually, because you can see the line is up way back over here. It's not too far off, so that's really the right spot for it. This key is you got to get over this number, 81.35, and we'll see if it's able to do that, but that engulfing pattern is good. So the yen might have saved itself there. And avoiding this breakdown that was a risk. Now, with the gold doing better, that's better for these currencies that are related to the resources. You can see the Aussie in here. This is a hammer bottom. This is 2 weeks early from what we expected. That's all right. I mean, I think it's establishing a low, and I think that you're going to start to see some better action here in the Aussie and the Canadian dollar. And like I'm looking for a bottom also in oil, right? So here's the Aussie, and this pattern right in here. You see it made a new low and then just left this big tail in there today, and that's a nice looking bar on the daily pattern. And we'll take a look here at the Canadian dollar, and here is again a couple of weeks earlier than we expected, and giving a little sign of a bounce in there. So again, these are connected to the resources, and that is really not a bad looking pattern in the Aussie and the Canadian that I think are starting to get a bottom. So overall, in these currencies, the dollar turned down sharply as we expected. The prognosis for the dollar is crappy, and that should give lift still to the euro, other currencies, and yes, the gold pattern, which is definitely improved right now. So take a look here. We'll switch over to /GC, and we're going to look at these precious metals. Gold has moved up through some of the areas of resistance that we were looking at, and definitely is taking on a better nature. Now that GDX pattern really is looking nice to me, and I'm thinking that that's a good sign. Now here's the gold pattern in here. On the weekly, you can see these basically timing spikes that we've had up here, and the very center of them is like right here, right? This does look like it's done on the bottom. Now this is a double star morning star, a couple little dojis in there, and that on the weekly is a very good pattern that sets up, if it sets up a low, then the low is likely to give you, well, how long are the rallies? The shortest rally off of these cycles right in here, well, this one was 3 months. This one was a month and a half right there. This one was 2 months right in there. Here was one that barely held, made a good rally, but that was 2 months. And this right in here is just 2 weeks. So you could see that sets up a scenario where you could get a pretty nice rally in here for a longer period of time. I like that. I think it's setting up nicely, and it's setting up in a timely way. Now let's look at these shorter term patterns in here. This is a little different than I expected, because I thought that the next decline would be the last one. Well, really, you could say that might be the case, but it's not going to decline as far. Look at this, the rally into that bottom of that resistance zone right there. Now what we're looking for based on this pattern is, let's say some fooling around in here, and then a decline somewhere in here, and then somewhere around mid-August to late August, a blast off on the upside right there, and that would take you to, well, this is the 89-day moving average at about 1150. That would be a pretty good target for it up there. So that's a look at the gold pattern, and we're going to switch over now to the silver pattern. And silver pattern, in a similar way, this is actually a pretty rare pattern that you're looking at. This is a triple star right here on the bottom, made up of these little doji hammers, and this is a triple star morning star. I mean, these are out of the textbook, and these make lows. And again, the same scenario as I talked about. How long does each of these rally phases last? Even in a bearish scenario, see the bearish scenario right here. This one was, well, this was about 8 strong weeks. They had a little dip in the middle. This one was about 6 strong weeks. This one was about 8 strong weeks. This one about 8 or 9 weeks, and here we are just 1 or 2 weeks. So you could see the scenario in here. It really says that the cyclical phasing and these patterns suggest a better time ahead now for gold and silver. I thought it was going to start in a couple of weeks, but it is starting now, and I don't make the patterns; they just show up, and that looks to me like a much improved scenario there for gold and silver. Take a look at platinum, which has been absolutely the worst of all of these, and this one also a bullish engulfing pattern there on the weekly, and a nice pattern. Copper has gotten, well, pummeled as this action in China and slowdown and potential slowdown in the world has really pushed it on the downside. It's extended this cycle out much longer than we expected. It's about 3 weeks past it right there. That's what a bearish scenario does. And really, we saw when it turned red in here that this was, a warning to us that you got to be careful, and it took, another 5 weeks on the downside in here. So that's really good information. Now, what do you have going on now? You have a bullish piercing pattern. It could be an engulfing pattern by the end of this week, and a potential bottom in there. So commodities are very overdone on the downside, and these patterns are telling you so. Here's a bullish engulfing on the daily, and the daily pattern turning up. We're going to look for copper to get up into this area of 247 to 252. That's kind of the area that we're looking for in what is a better scenario in here. You can see today there's that hammer bottom after this engulfing pattern. It made another little low and then is giving you the hammer. So good signs here in this last week of that level being an important level, and copper getting a bottom. So how do you like that? We get into this area where everything is really looking weak in these metals, and then all of a sudden China takes its action. That is the impetus for the bottoms that we were looking for here in the precious metal market, and there it is. So those look to me like you look for dips and they become buyable in those markets. Switch over to the treasuries now. Treasuries, the short-term scenario clearly has changed. The intermediate to longer-term scenario not changed at all. I still believe we're in a bear market in bonds, that there are risks of strong downside moves coming in there. But the shorter-term scenario gives us warnings that don't look for that really at the moment, especially with what we see going on here in China. Now, our stock market is likely to get a bounce, and I'm going to show you that in a little bit, and that's likely to set up a big pullback here in the bond market, but not to the points where I thought they were going to get to before, because the direction of the phasing is skewed now more to the upside. So that's an important aspect here as we look at /ZN. That's what we're going to look at right now in the bond market. Here is the bigger scenario that we're looking at. Here I want to move this back out to 10 years so you could see how these cyclical patterns are forming up. Still a little hoarse here. And here you could see that important low at 24, important low at 28, this one at 23. So all of these really important lows, and this one very negative. Now we rallied, and we rallied up to some pretty good resistance areas. Now this last big up week in here came at a time when I would have expected these three cycles to have grabbed a hold really strongly and move on the downside. In fact, I did expect it, and I did say it. That so the deflationary scenario around the world has changed that. Now, it's gotten up a little further than I would have expected, but it did not change the intermediate pattern at all. Here's the shorter term pattern, and this has changed. And here we could see as it pops up through the 78.6%. Now, if you can get through the 78.6% or even to it, that shows you the scenario in here for the shorter term is more positive. And you can see this upward channel that the 10 years are trading in right now. Pretty clear. Now this scenario in here, this was a early bottom right here. Really took me by surprise. I expected this, when it rolled over, to finish one more time and then get into the next rally. So that did not work because of China, and now we got into this rally. So now where are we? Well, we look to me that this is a pretty key area in here, and I think it's going to struggle because I think the stock market's going to make a bottom in here in the next couple of days. Then I think what we get is, well, you got to skew it over a little bit. This right in here and then this, because I think the stock market's still in trouble. So that means a pullback. We'll look for 127.16 area in the 10-year into this support zone, then the next rally right in here, and then another decline after that. So this all got pushed over, and the best I can read it is that this is an important area here at the 78.6%. If I switch this over to ZB, and I know a lot of people are trading the Bs versus the Ns, here you could see the 78.6%, it did not quite get in there. And the scenario a little bit different in here, in that there's still time to pull down. We're going to look for 157-ish or so, and then another rally after that, as this looks to complete pretty much a little bit skewed over from the 10-year. But that's kind of the scenario we're looking for in here, like that. Stock market bounces back, stock market goes into a big decline again, and then the stock market bounces back as the inverse correlation in the short term is holding up in here. You can see the shooting star forming in here on the day. This really looks like it's with the 10-year ready to pull back. So that is a look at the bond market, definitely skewed, definitely related to China, and definitely my job as an analyst to look for how these things change and how I'm going to change my short-term trading in them based on that. So I'll show you now, because I said I thought we'd get a pullback in the bond market and then another rally. That would be the inverse to what I'm looking for in the stock market. So we're going to look at SPX. And SPX, well, we're going to start out in the Russell, because the Russell is the one that cued me to the fact that the stock market was putting in a bigger top. It was breaking down. Everything about the Russell had it breaking down, and I didn't even plan on doing this, but I think I want to show the moving in the MCI. On these four indexes, so you could see it. A lot of people that are my chart subscribers have this, and you could see this is just such interesting action as the Russell broke down under it, right under here, under the swing zone. And each of these attempts under the swing zone, and you can see it, we're like at minus 85 right now. This has been really a sign of the negativity in here. The Dow Jones did the same thing. Really extraordinarily negative look at how these indexes have been really internally breaking down. The SPY wasn't as weak, but you look at the swing zone as it gets to the bottom and then fails under there. Those are amazingly weak patterns when you look at this. And the NASDAQ, which was the strongest, now plunging down through there, and it's turning negative also as Apple turns really south in there because of China. This is some very, very negative scenarios. And we'll get a look at how a bounce comes, and I'm based on this. I'm not looking for real sharp bounces to hold in the stock market, but the Russell really was the key. The Russell and the Dow, they gave me a sense that there was some weakness coming in here now. I just realized that I didn't have that chart up when I showed that to you, did I? I'm going to go back and I'm going to switch that over again so that you can see. It's going to be redundant, but I don't want you to miss that. There is that chart right there. I've been talking about it and you didn't see it. So now I realize that. This is all the action under the swing zones that I was talking about right here. This turning under it on the NASDAQ, and the Russell and the Dow having given that indicator right there that it was really the weakest of all. Okay, now we'll get that out of the way and go look at the chart. Sorry about that mess up. Sometimes I'm switching so much in here I don't even know what I have up in time. So take a look here now as we look at the weekly chart in the Russell. Let me get this up on a weekly, and then you'll see what I had seen. Here we go. There is the Russell right there. This chart right here, you can see that it is breaking down right in here 3 weeks ago. As it broke down under that low, that put it in this red zone, and I said this is a real big sign of trouble there in the Russell. When you look at the daily chart, it was in a downward stair-step move, and as we got the rallies last week, it got into that resistance zone, left those tails, and just kept failing. And this is the pattern essentially we're in now. And question is it done yet or not? It might have another day or two, and I'm going to show you that in the rest of these patterns also. Let's switch this over on the weekly to the S&P 500, SPX, and here we go. And this is important on this weekly, and that is, you can see this is where that weekly cycle at the 14 began. Now this one has not broken down yet, and it's coming back down into that support zone. That low at 2043 is a very important number. If that number breaks, the odds will be very, very high that this cyclical pattern right here will go out to somewhere like 12 to 14 weeks. Right now we're only in week 6. That would set up a very, very long decline and sharp decline, a ton of risk in the stock market. So we're looking at that really, really carefully. 2043, an important number. Now this was the pattern that we were looking at in the daily, and man, this one worked amazingly well. When it made this low on the 9th day right there, what was the probability that that was going to be the low? So this rally was so likely to have failed, and look at that, comes up perfectly to the resistance number and then breaks down again. And here we are right over here, that 1243 low over here. So it's above it right now. So this is day 12 on the downside. Day 12 to 14 is when lows come. We're going to look for some choppy action in here as it either has made the low or will in the next couple days, and then a rally. And that rally should get you up to the 2082 to 2090 area. Now, there is a very, very thick area of resistances up here. I can't tell exactly the number it's going to stop at, so I would say, 2090, 2092, those are big numbers right in there. Big fib confluence just around the 2100 number. So rally is going to likely take you into these resistances and then turn down again in a big way. So like I said in the bond market, I said I thought the bond market was going to have a pullback inverse to this rally, and then another rally inverse to that decline. So that's how it's setting up right now, looking at that index. Next thing we'll look at is the NASDAQ and NDX. Of course, this is so influenced by the action in Apple. Let's move this to see this pattern in here and see that 12-week low. Like the S&P 500, still above those supports. No major breakdown in there yet. And by the way, the Hull moving average on the monthlies not rolling over yet either. When you look at it at the NASDAQ and the S&P 500. Yes, though, on the Russell, which it has been for a long period of time. Now, here is the NASDAQ in that short-term pattern. Now, the same thing that we're seeing here, and a hammer bottom going on right here. This is a bigger sign that this low that we're putting in is the low, or if we test it, that is going to be the low area right there in the next couple days. So same scenario that we're looking for in the S&P 500. That would be kind of fool around in here, rally up to this resistance 45.36 area or above, and then the next decline right over there. So that is a look at the stock market overall. Very, very significantly bad pattern in the Russell, and the stock, the broader market really tracing out a pattern that looks very negative to me. It has not broken down in the weekly yet, still in that range that it's been in for 6 months. So I can't call it, you know, a major correction in play here right now. All I can call is the deterioration as I've seen it, and that says to me that rallies need to be sold in the stock market, and we look like we're starting to get one right now. And the dust settles for a little while in the next week on China, and we get some kind of a rebound in the stock market, and then I think it all goes down again. That's the way the setup is in there. Very quickly, we're going to look here at these grains. I know that there's a few people out there that are following the grains and comment when I put these things up. So we're going to look at /ZC to start out. I commented last week that I thought that these grains were setting up in a pattern that looked like it was very much threatening for the long term, in that it had given up a lot of ground. The soybeans looked like they were the ones that had the greatest risk, and they had actually the best bounce. But these markets are still looking to me like they're in some trouble. Take a look here at the corn market. There you go. It's fallen underneath that 61.8% and continues to move on the downside. This is a bad pattern as it's given up all of that ground. The wheat market, that one, also, they all tried to put on a bounce that they really could not hold. This one tried to bounce. You could see the big reversal in there under the 78.6%. These are all bad patterns, and they all line up to lows out there in October. And that means that, you know, this is essentially the pattern we're looking at in here, and that is a bad pattern there in wheat. Soybeans, they tried to put on a rally. They are getting absolutely annihilated today. After trying to put on a rally, that is now a red zone. That will change. Getting under this low, we were worried about that, and it tried to rally and gave the whole thing up. Soybeans down 54 cents on the day as commodities get absolutely hammered. And last one we're going to look at is oats. And there is the oat market holding up at the 78%, but overall a lot of risk with the rest of the market there in grain. So that is everything that we're looking at here in the futures market. Hope you found it all valuable. Sorry for that little glitch where I didn't have the charts up I was talking about. Basically, you know, energy looking like it's trying to make a bottom, the dollar in a lot of trouble, and inversely to that, the euro looking really good. Dollar in trouble because of China helping the metals markets. Those look like they're bottoming. GDX looks rock solid at that low that it's made. Treasury market skewed the pattern, and the deflationary scenario is really getting them to look like they are going to be waffling up in this area, with the stock market having a lot of risk and probably a false bounce coming in the stock market. That is everything that we're going to look at today. Hope you found it valuable. Please send your comments or questions through the form on your dashboard, and looking forward to seeing you and talking to you through emails. That's it for today, and I'll see you in the next segment.